Okay, MegaWhale team, welcome back to the channel. Thanks for tuning into today's video. Now, I wasn't going to do a video today, but I decided, I'll jump on and do a quick update because there's a lot of panic in the market right now, and it seems to be the case when Bitcoin moves down. And even though we've moved up 40%, that little small percent down, that 4% drop has caused a lot of panic. So we're going to talk about it, talk about why I guess you should remain calm as of now, why there's no reason to panic, and I guess we're going to talk about the major trigger levels on the way down. What points should we start to consider offloading some of our spot positions and expecting a little bit more of a downtrend. Before we get into that, guys, head over to the pinned comment, join our Telegram, trying to get access to our updates, analysis, and a whole range of more information, all our videos, all our charts over here if you're interested. Let's go ahead and get into it. So Bitcoin is currently formed a nice uptrend. It had about a 40% pump, and we've been struggling with this current resistance zone for quite some time now. I've talked a lot about it. We've been struggling with this zone for quite some time. We do have this short-term uptrending support line, which dates back to the 13th of July, and that kind of marked the bottom for that last CPI release, I think, the 13th of July. We pushed upwards, we came back, we retested this level, we pushed upwards, we've retested this level again, and the question is, do we hold here? Do we push back upwards, or do we fall back down? And was this recent drop just in anticipation of the CPI, or was it a natural retracement and a continuation potentially lower? For that, we're going to have to look at some other charts. First and foremost, the total cryptocurrency market cap. We talked about this one in the last video, and I highly recommend, if you haven't watched that one, go watch that last video, but this is just going to be a short update. We don't have very much time today. So we have rejected from the major trigger zone for the next move up, or would you say continuation upwards, and hopefully into a new bull market eventually, which will be this trigger zone, this support resistance range you see on the total cryptocurrency market cap chart over here. We've currently got rejected from it, but like I said, we haven't lost our diagonal supports, we haven't lost our horizontal supports, we just haven't pushed through this level. And a lot of people are probably thinking, well, is this a bear trap? Is this a bull trap? Whatever. The short answer to that is no. All this was a swing from the lower support range, okay? A move from the lower support range to a move to the higher support range or resistance range, okay? That's all we've seen over here. It was a 40% move. That's all we've seen. And with that, we assume the bottom is in because of the position of which we saw the bounce. And the position with which we've seen the bounce was the bottom uptrending 9-year diagonal support, the same support level we've seen the bottom reach on the last two bear markets. That is where we bottomed out. Now we're going to talk about this because a lot of people are thinking up only. If we've reached the bottom, we must surely only be going up. And if we go down, it's the end of the world and we're going to new lows. That is simply not the case, guys. I've said many times, just because we reached the bottom, just because the bottom is in, whatever, it doesn't mean we're just going to go moon. It doesn't mean we're just going to see something like this. We never anticipated that. We were never expecting that. And it was unreasonable to assume that. The 23.8K level, which is this level over here, was the trigger and has been the trigger for the next move upward to this major resistance, okay? Now, if we broke a daily and closed a daily above there, we would have seen a move upwards to that level. If we do not, and however, if we do get rejected from this level, we can see a move back down. And the thing is, it doesn't matter if we move back down. What matters is that we remain above not only the bottom, but as well as this uptrending support line. Those are the two key triggers. If we remain above these levels, we are still in a uptrend from this level. We are still likely to push higher and continue. If we look at previous cycles and look at the bear markets in previous cycles, and I really don't like fractals, but we're going to go ahead and show you what I mean. Let's just go ahead and take a fractal from here. I despise fractals, guys. I really don't like them. So, me using a fractal here is just purely to show you guys an example. Let's change it to black so you can see it a little clearer. We get, you get a drop down, we bounce around. It's possible we see something like that. We come down, we bounce up, we come down, we retest this line, we hold this line for a little bit, maybe we fake out underneath it again, and then we push through, later in the year and actually complete that trend upwards. It's a very real possibility, but like I said, the likelihood that we lose this 18K level is incredibly low. And a lot of people still thinking out there, we're going to go down, we're going to go down. And yeah, very well, if we do lose this level, it's not something to be celebrating, guys. We've been saying this the entire time. We're all in the same market. We're all trading the same cycle. We don't want to lose this 9-year trend line. We don't want to lose this pattern. We don't want this 4-year cycle to become invalidated. That is not a good thing for crypto. It's not a good thing for trading longevity. It's not a good thing for predicting macro trends. It will be a negative thing for the market. Regardless of if you're in shorts and you make a short-term profit or not, losing this trend line, losing this level would not be beneficial for the greater cryptocurrency market, and therefore it's not something that you should want to actually see happen. We would all want to see this trend line hold. The only reason I can imagine you don't want to see this trend line hold is if you accidentally, sold down the bottom, or you didn't purchase on this way up. But even if you didn't purchase on the way up, guys, there'll be another opportunity to purchase. Like I said, if we do lose this level here, if we do lose this uptrending support line, we do have this lower support, which will be this trending support line over here, which we can look for an entry again over here. And worst case scenario, we retest this downward trending diagonal and this major support zone for another bounce. Okay, until we lose all of those 1, 2, 3, 4, 5, 6, 7 support levels, we are no longer looking for a drop down below this 18K level. Those 7 support levels are providing a very strong basis of support for us at the moment, and therefore we have to be aware of that. Now, CPI is coming out very shortly. I think it's coming out in, let me just take a look at the time. Think about 10.5 hours if I've done, or maybe 9.5 hours, depending on how my calculation, I think 9.5 hours. And forecasted data for the CPI, if I remember, is 8.7. So it's a little bit lower than last CPI release. So we are expecting a pullback. Now, the forecasts are always historically incorrect. They're usually always off by about 0.3. So even if it's 8.7 and a 0.3 deviance, that brings us up to 9. That's still lower than 9.1 from last time, which will be seen as positive and favorable for the market. And I said, and I talked about this in Telegram, that I believe this recent move, this recent pullback is a combination of, number one, we're getting rejected from major resistance, which we are. This is major resistance zone. Until we break above this zone on the daily, we should treat it as resistance and expect that there's a possibility for the price to fall down. Okay, it is simple as that. Okay, you should always be expecting that, and it's a very high volatile range. And number two, that people are de-risking for the release of economic news, because like I say, one of the main things we do on this channel is we do not trade into economic news. We won't be looking for trades today. We'll be looking for trades after the news release. Trading into economic news is one good way to get wrecked. So it's a bit of a gamble right now if you're jumping in a market and trading. If you want to scalp trade, if you want to put entries at support lines with tight stop losses, for example, over here, go ahead. But if you're looking to position yourself in a swing for the next few days, you're probably taking a bit of a gamble, and I don't think you should be doing that just yet. With that being said, guys, I think I'll leave it there. We'll have a video out tomorrow which will go in a little bit more detail. I just wanted to make everyone aware that right now, this is really nothing to panic about. Look at the price action. We've gone down from all the way up here, 40% move, and now we've just seen a little bit of a drop down. Only a 5% drop down. It's really insignificant, and if anything, it's a drop down within not only this this shorter time frame rising wedge, which is a bearish pattern. Keep in mind, is a bearish pattern. But as well as this very, very volatile range. And, we haven't seen anything abnormal happen yet. We've seen this volatility occur and play out within this range, for days at a time. And this drop down is nothing more than a combination of us being within a very, very highly volatile resistance range, CPI coming out, and rejection from that major upper band of 23,800, pushing us down quite quickly and quite volatile. And I think, guys, just remain calm. Be patient. If you bought spot, if you've been following us along the way, even if we go back down to this level, still a huge profits on our spot positions. It really doesn't make much of a difference here. The macro trend is looking still favorable. It's just that short term that's getting a little sketchy. So zoom out, take a break from the market if you can't handle this short term volatility. Come back after CPI, wait for the damage to be done, and then look for re-entries, look for accumulation spots, and get back into market. Okay. Real quickly. If we do lose this trend line, we've been saying this the entire time, if we do lose this trend line, which I believe is very, very unlikely, we've said there's many indicators suggesting that this is the bottom, and it is incredibly unlikely that we do lose it. It's possible, but it's incredibly unlikely. If we do lose this trend line, we would need some sort of black swan event. Obviously, there's a lot of potential black swan events going at the moment. Obviously, the economy is not in the best spot. Taiwan situation, maybe more, who knows, maybe another virus. It could be something else that comes along the way that could really hammer the market, massive regulations. It's hard to say for sure, but there's always a possibility we do see a drop. If we do see a drop below that level, we've already discussed our targets. We've already talked about our targets. You know, we talked about these months ago. 13,000 was one of our first targets, 12,000 and 9,000 as our lower targets, okay? Now, the possibility of these playing out is incredibly small. I really do believe it's incredibly small, but like I said, these targets only become active if this trend line loses, and this trend line is most likely not going to be lost, but if it does, there is the targets for the people who are still massively bearish and the people who are wanting this trend line to lose. Anyway, guys, I'm going to leave it there. I don't want to go too much more into it. That is about it for today's video. I will catch you in tomorrow's video, and hopefully we have some price volatility, some price action, have some direction after the CPI tonight. I'm sure everyone's going to be up wherever you are watching the CPI, taking a look at the market. I just recommend giving you guys one piece of advice leading into the CPI. Is there's going to be a lot of volatility just before the CPI release and just after the CPI release. I think do not trade or do not try catch a trade during that time. If you're not already in a position as a big profit, don't expose yourself to that risk. The market will move very volatile like it has before. Wait for the news to kind of subsidize it, clear a little bit. See where the price has landed. If it's landed at some supports, you can take some entries at supports. If it's gone up and hit some resistance, take some shorts. Wait for the price action to present itself to you. Wait for a trade to present itself to you. Don't try too hard to be looking for the trades because that is how you're going to get cut up, okay? That being said, guys, see you in tomorrow's video. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend sign up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.